I have spotted a very big problem. What has happened is, now that I'm actually going into the trading on this $250 account, if you're confused, please watch this video over here. This is the introduction to my double account project. It's actually a thesis study that I'm doing. But I'm actually trading right now, and I've spotted quite a big fault in my parameters. And it's not a fault that I created. It's just basically what has happened is that it has shown me trading a professional strategy on a small account is not the right strategy to use. So basically what I have to do right now is show you exactly why. Because like I said to you right at the beginning of this project, all of the results are going to be real. It's going to be live, it's going to be shown to you. You know, for all honesty, if I fail this project, and at least I can actually show you exactly why it failed and how it failed, because that's the most important thing. I'm finding out as much about this as you are. But effectively what happened was I was trading on a 4-hour strategy, and it's on the MFI strategy that I was trading. I explained the basics of the MFI strategy in a video that I posted previously. I'll also link it up here for you to go have a look at. But basically what was happening with the MFI strategy is I was making use of seeing where the money was flowing throughout the market. And I managed to capitalize on a 4-hourly chart trade. And basically what happened is I realized that being able to conduct risk management on such a small trading account is much more difficult than what I was trained to do. So just for starters, risk management is effectively what we make use of to try and identify and at times correct things that either might be going wrong or our mistakes throughout the trades. But firstly, your risk management starts with your execution points. Where am I going to enter? Where's my take profit? And where's my stop loss? And effectively what happens is, due to quite a few calculations that we're going to go into on the computer, it effectively doesn't work very well when you're trading on a small account. And this is specifically because when I am trading my large accounts, which is quite a few $1,000s strong, it allows me to be able to give my trades room to breathe. Not to say that I'm trying to sort of set deep stop losses and stuff and just let my trades run until they succeed. But what it allows me to do is, in terms of trading Forex as well, as an example, the margin for error on a 10-minute chart might be between 5 to 15 pips before you know you're really wrong. But on a trade like on the 4-hour charts, the margin for error can be anything between 50 to 150 pips. And that is an incredibly big problem, even when trading on a lot size as small as 0.01, which is effectively 10 cents a pip in US dollar terms. It still will effectively cut down my account beyond where it would be recoverable, which is the biggest problem. And when 250 pips is the actual target that I'm trying to reach on a monthly basis, but a single trade could set me back 100 pips on a stop loss, that's actually impossible to try and achieve. If, say for example, I hit 3 bad trades and I hit my stop losses all at 100 pips, that's 300 pips lost in just 3 trades. So what I've realized is, number one, either I have to be incredibly careful with my trigger points, and basically where I'm executing is at the absolute maximum point that I might be able to enter, which basically means my margin for error goes like that. It becomes incredibly small. And there are big issues to this. Number one is going to be that firstly, I will struggle to be able to spot if the trade is going wrong or not. And number two, my stop loss is going to be very close to being hit. Or number three, it probably is going to get hit from time to time, and then the trade is going to move back into my favor. So that is a big problem. The next solution I have is, like I said, with the 5-minute charts. As an example, yesterday I went back onto my big account and I managed to capitalize on trading the indexes, and I did incredibly well. You know, I made the size of this account in nearly 20 minutes on that trade. But the thing was that my margin for error was incredibly small, because the margin for error on something like a 5-minute chart is going to be anything between 5 to 10 pips. And if it's wrong, it's wrong. And then basically that would amount to $1 loss on my small trading accounts if I'm trading at 10 cents a pip. So I know that all of these figures probably sound absolutely crazy, but what I'm going to do is just effectively spend some time showing you exactly what I mean on the chart, because I think it's very important that I put the calculations down and I show you the cold hard facts of exactly why it is probably going to be incredibly difficult to use a small account trading larger time frames. Because for myself, when I trade the larger time frames, I'm trading the hourly, the 4-hourly and the daily. But the problem is that I'm allowing my trades to gain into sometimes anything between 50 to 150 pips loss. So that just allows my trades room to breathe, because sometimes, unfortunately, the market does do things where it causes a washout, where it might go beyond where the trigger point is and then still pull back. But basically what I'm going to do is not just slice down and dissect the current trade that I'm stuck in, but also slice down and work out exactly what my risk management is going to be going forwards. Because that is the most important thing for me as well, is to make sure that I'm able not only to be able to recover any losses I make, but get back into those profits and get back into making a double on the account. Because once again, this project is effectively to show you if you can actually make a profit on a small account as a trader starting out. Because everyone that is saying that you can make money on a small account is probably incentivized to do so. If you go to a training institute and you say, I only have $250, I want to study through you, but I want to make money, what do you think they're going to say? You're a client sitting in front of them. They're going to go, yes, you can. You can make money off of a tiny account. But what I'm trying to work out is if that is actually true. And I'm trying to take together all these details and the reporting to actually show you if it's possible. So it is kind of funny that I'm also doing it, because I have bigger fish to fry than using such a small trading account. But for me, it's also for my interest's sake to actually see if what I'm able to put together as a training program for my students is going to be comprehensive enough to show them how they should be flipping small accounts. So that's basically what I'm doing, is I'm developing a strategy on how to flip small accounts and then how to slowly grow up and start getting into those big accounts, the few $1,000s, up to the $100,000 accounts, and showing you how you should be flipping them and growing those accounts. So what we're going to do is jump into the computer. I'm going to first dissect the trade that I'm currently in, which is actually it's currently in a small loss. So I'm going to show you exactly what is happening in the trade, why I entered it and why is it going wrong. And then what we're going to do is dissect more of the actual risk management information. Now, it is going to be difficult to show you this, because all of this risk management information I actually teach to all of my students. So it is going to be very basic, plain and simple, because I don't want to have to show out all of my information to the world, because I don't feel like showing out all of the information that my students pay for. But what I'm going to do is just show you the basics, show you the bare bones minimum that I use in my trading plans, and also exactly how I'm able to build my risk management profile. And this risk management profile is what I build for every single trade that I enter. So that's also probably what I need to impress upon you the most, is how much I actually put into building my trading plans and going through my risk management. Because for me, basically every single trade is the most important trade for me. And that's something that I live by, not just as a trader, but I also apply it to many other aspects in my life. Anything that I enter into is going to be the next most important thing that I have to accomplish and get over. So I also want you to take that into account, is how important this little piece coming up is going to be for you. So once again, let's get to it.
Okay, so now we are actually in the trading platform, and what I'm just going to show you is the trade that I got myself stuck into. So this is once again on the live account, and I'm just going to show you here. This is the current progress on the trade. So you can see I'm down 2.92, which is 29 pips, give or take. There we go, popping just on 30 pips. And it's just basically been sitting around there on the 4-hourly, and recently it just surged quite badly. So if you have a look on the 15-minute here, you've basically got quite a good surge going into, I should just double check the time. Yeah, it's sort of going into the mid-morning of the US trade session. So that has caused quite a bullish move. Also, something that I was having a look at is the Dow has been very depressed and took a massive drop previously on the market open. So the US markets are quite hit badly today, which is pushing the price of the euro dollar up. But what I actually anticipated is on the technical aspect. If I show you here, this is on the Dow June 17th CFD. You can see the last candle is a 4-hourly candle, which came out on the US market open. Basically what I was looking for is, on this downtrend, I was looking for a retracement off of this trend line. So this is effectively a downward trend line that I've drawn in parallel to this previous downward trend. So I did feel that the trend was going to follow suit. So what I was having a look at is basically price was trading within a range over here, and this sort of went back into a range over here after an uptrend. Price pulled back down, traded over here, didn't like the price area, and trended back up to reprice in the same range. So basically we have three ranges here, and what I felt was going to happen is either price was going to bounce off of this area and try to keep trading within this range because this upper range has been preferred, or it's going to move back down and reprice back into this range over here. Also, given the fact that if you look on the stochastic is showing an oversold, and the money flow index is still moving back into that area. Once again, to have a look at that video I put up in the beginning about the money flow index strategy. Still a very simple video, but that's basically the offset of what I was looking at. So basically, that was what I was having a look at. Is I felt the Dow was going to hit a bullish day today, but I was wrong, and it actually stayed bearish on the market open, which has obviously caused a massive surge here. So what I was having a look at on the signal candle that I was talking of is I began building my trading plan. So if I just walk you through the trading plan, I'm just going to move it over to one of my screens. So number one, I used as a technical strategy saying testing previous double top from HR resistance test on 3rd November. So if I have a look on the 4-hourly, 3rd November was basically in this region here. So if I take a HR line, you can see back in this time there was a HR resistance test which has occurred again here. So that was obviously an opportunity to test for a double top. And also if you have a look in this time period, okay, aside the repricing spike over here, which was actually just caused from some false news reports back in November, basically you had a perfect MFI strategy trade that just dropped off almost perfectly off that 80 point overbought region and pulled straight back down here, and the repricing was amazing. I mean, that moved straight back into a lower trend and then caused some great market volatility here. So that's what I felt was going to happen. Also, because of the previous few days being a downtrend for the Dow, I felt there was going to be a recovery, which was going to show a bearish move on the euro-US dollar. So that was a big correlation. Number two is that it was overbought on the stochastic at the time, overbought on the MFI, and then also the MFI parameters approved. So I was happy to see that the MFI moved above the 90 point region, And if I take my vertical lines here and tie between the trigger point, the signal point that I talk about, and the trigger point, it was a delayed time period, which is also good to have. So it didn't occur immediately, which can also cause for concern. But the one main cause for concern that I'm also looking at on this trade is that it has stayed in the overbought region for an extended period of time, which is now part of my warning sign for closing the trade. So a big point that might force me to close this trade before it hits the stop loss is because it has stayed in that overbought region on the MFI, which is actually an early warning sign for the MFI showing a break. So effectively, if you look back in this region here, let me just put a VR line for you so you know where I'm talking about. I'm just going to recolor this so it looks different to the other ones. If you have a look here, I'm just going to mark it in blue. This is a great example of a trade that should have played out the way this current trade was not playing out. So if you have a look here, you've basically got your stochastic enters that upper 90 level region. The MFI doesn't pierce the region, but still has a good play for it. And you've effectively got, the second this begins to reprice and move into the negative, if I put, let's call it a trigger candle situationally here, you've got a repricing moving right the way down. And it was instant. It was almost instantaneous. And now if you look up in this region, the MFI has not only stayed within that region for a long period of time, but if I look back historically, it hasn't done it before. So obviously that's a warning sign to show that I'm not happy with what's currently happening with the MFI. So that has entered my set of warning signals. So I'm already now allowed to actually close the trade because I already have a warning signal that's showing me the trade might be going wrong. So if I go beyond point number 4, the MFI parameters approved. Point number 5, previous few days of trading marked an exaggerated bullish move on the Euro US dollar, far stronger than the market expected. Retracement is expected, so there's a few points there that I need to mark. On the Euro US dollar, you can see now the past couple of days have been very bullish. It has been seriously moving, and it's also due to quite a lot of market specifics and stuff. We also had the French elections who put a big play, the weakening of the American indexes in the past week or two. So that has been a big play on the market. So basically, my traders and I were having a look at when the market was going to get into a breather, so hit that retracement area. And it was very close to sort of a back and forth argument of saying, we think it's now, but I felt like the money flow index wasn't showing it. But the biggest issue is that the bullish move was much stronger than expected, which means the retracement once again is also expected, but it's not happening. So that's what now I need to spend my time analyzing, is exactly what I feel is going to be happening over the next couple of days. So what I'll be focusing on is understanding what's happening on the Dow index, because the Dow was supposed to be going into recovery from what I felt, analyzing it technically and fundamentally, but I was wrong, which once again as a trader happens. And also the big one is that the DAX took a big hit as well, and the DAX is also keeping bearish for a bit. So now I'm trading the Euro US dollar, where both co-correlating indexes are bearish, which is bad because it's going to weaken the currency pair, and that's bad for me because I need a strengthening currency pair to be able to short it. So that's a bit difficult for me to handle right now, but basically what I need to focus on as well is just having a look into what's going to be happening throughout the evening on the Dow. So because I do have the previous experience in trading equities, I'll spend the day basically looking at the market, seeing what's happening in the repricing of the indices. And then I'll also have a look at what's coming out on the news throughout the evening. And basically coming into the European Open early morning on Thursday, I'll need to see where the market is going to price at, and to see if it might turn into a bullish market for a little bit. From time to time, I do see bearish markets coming out on a early week, and sometimes the markets turn bullish towards the end of the week. But we are coming up towards month end, and sometimes that can cause some issues and market volatility. But once again, what I was trying to do is just show you exactly what's happened to the trades, what warning signals it's triggered, and the biggest one is my trading plan. So the big one for my trading plan is effectively I have set my stop further up than I would usually have set it, mainly because that I feel the market could cause a washout. So what happens with a washout is basically it, in a sense, could pass a double top region and move, let's say 30-40 pips above it, and then still cause a retracement. So that's basically the reason why my stop loss is set so high, because I could feel that it is causing a washout. But once again, like I mentioned in the beginning of this video, that's damaging my risk management procedures. So what I'm going to do as well is now basically show you exactly why I'm struggling to manage my risk trading long-term trades on such a small portfolio. So what I've done here is just basically drawn up a rough risk management profile. This is a very, very simple profile. The main profiles that I actually use, I only show privately to my students and to the rest of my traders. So we're just going to make do with this. But effectively, how you'd monitor your risk profile is you take your account size, so let's call it $250. And what you'd effectively do is try and trade that on the smallest amounts possible. So usually what I have a look at trading is on 0.05%. So whatever 0.05% of my account is will become my lot size. So if I take a $50,000 account, which is over here, basically $5,000 would be 10% of the account, $500 would be 1% of the account, and $50 would be 0.10% of the account. So if I want to trade 0.05, then I can only trade at $25 a pip on a $50,000 account. But the thing is that here, if I take a $250 account and I move my decimal place, then that's 10% of the account, and basically 2.5% is 1% of the account, which effectively means to get 0.10, I have to put 0.25 or 25 cents per pip that I'm able to execute the trade on, which effectively means 5% of that is now going to equal 0.125 as an example. So basically the smallest lot size that I'll be able to trade roughly, also because I need to use it for my account management procedures, I'm just going to choose 0.10. So 0.10 cents per pip. So that effectively amounts to trading at 0.01 lot size on my trading account. So if I put 0.01 as being 0.05% of total accounts, then the dollar value is 10 cents, which is 0.05% of my account. So my maximum loss per trade is 5% on their account. So that's basically how I'm working it on. So I know that if I make a drawdown on 5%, then I have to cut the trade. So if I take that 5% and 5% of the trading accounts is effectively $12.50. So if 10% is $25, then half of it's $12.50. So basically, I'll take $12.50 and divide it into 10 cents per pip, because that's basically, if I am trading at, let's say, $1 a pip, then I can only lose 12 pips before I lose 5% of the account. So I divide my maximum lot size in dollar value into the maximum loss dollar value, which gives me 125 pips. So I basically know my maximum loss is 125 pips. So that effectively means if the trade goes very wrong, the furthest it can go is 125 pips before I cut the trade. But because with my risk management, I put so many risk management procedures in place and also warning signals, often what I'll do is actually cut the trade earlier. So I've never really run a trade into 125 pips loss. I've probably cut the trade at 40, 50, 60 pips loss and just basically walked away from the trade. But what I've got below is basically error margins. So if you call this an error margin, this is effectively how much pips could be shown before you can identify that a trade is actually not going to work out. So let's say, for example, you're following a strategy and you're saying to yourself, okay, if it passes this level, then I know this strategy is not working and I should close my trade. Basically, what I use as a very simple rule of thumb, everyone has their own different procedures that they'll follow. But on a 15-minute chart, I tend to find 15 pips loss will tend to show me if the trade has gone wrong or not, and that will usually allow me to close the trade immediately. A 30-minute trade will usually be a 25 pip to 40 pip loss before I know it has gone wrong. 1 hour is usually 50 pips, sometimes it can go up to 70, and 4 hour is 120 pips. So 4 hour is basically now hitting my maximum threshold. So the thing is that on a 4 hour trade, my room for error is nearly 100% of my maximum loss, which is bad, because that effectively means I will have to wait until that entire 5% is lost on my account before I can actually identify if the trade is going wrong or not. So I know this leaves room for error and the margin being quite big, which for intents and purposes, everyone is going to try and disagree with. But once again, this is what has worked for me. And I'm the one telling the story, not you. So you can just listen. But basically what I'm saying is, on the 4 hourly trade, I would have to reach my maximum risk exposure to see if the trade is going wrong or not. And on the daily, I'd have to wait till it pushes 150 pips before I actually see it's wrong or not. So basically what this has caused in this region, let me just mark it orange, it's basically like a do not enter region, because I will never be able to spot if the trade is going wrong or not, because it's basically going to push the maximum account size loss on this poor account. And that's dangerous, because that's basically increasing my risk for failure. Because let's say, for example, I hit 4 losses in a row, then that, let me just move it on to here, 4 losses in a row will amount to 20% lost on their account. Oh, for goodness sakes. 20% lost is an Excel an absolute beauty to work with. So if you have a look, that basically means that if I enter 4 of these trades and all 4 of them go wrong and use up my maximum loss, which is marked here, then it equals to 20% lost on the account, which is massive. I mean, that's huge. If I lost 20% of my big trading account, I think I'd probably shoot myself. It would be a huge loss for me. On that trading account, losing 10% would be a major issue. So that's why the risk management on 4 hourly trades on such a small account is almost impossible to achieve, which is the biggest problem. And over here, the max loss on a daily trade would also be impossible. So effectively what it's meant is, in order to trade on 4-hour and daily charts, my risk management is going to be thrown out the window, which basically means that I really can't expect to make a consistent profit trading a 4-hour or daily chart, because I can make, let's say, 60 pips on 4 trades, but then lose 2 trades and it would wipe out my profits immediately. So this is effectively what I'm identifying as a massive risk exposure error. So as traders, what we're effectively focusing on is understanding where our risk parameters lie with them. And by doing so, I'm able to very closely monitor the risk exposure that I'm putting on my accounts, depending on, firstly, what time frames I'm trading, what lot sizes I'm trading, how many trades I have executed. So if I do something like double up on my trade, add to my position. And then fourth will be if I'm hedging my positions. So basically a procedure that I was taught was hedging my positions with co-correlating instruments, which will allow me to cover my losses if I'm wrong. But like I said in the first video of this double account project, is that one of the rules is I'm not allowed to double up on any of my trades, and I'm not allowed to hedge any of my positions. So basically my 2 special tricks that I use, I'm not allowed to use on this account. And basically what this has helped me identify is trading 4 hourly and daily is effectively now become a no-go, which is bad. Now trading the hourly is obviously well within my grasp. Trading the hourly, the maximum loss is usually 50 pips on that trade. So, but still, if I have a loss of over 4 trades, then I'm going to lose 5% of my account. So basically what I'm going to do is just mark it orange and say trade with caution. So over here, I'm just going to say trade with caution. And if I make 4 losses in a row, I'm looking at probably a rough estimate of 6% lost. So now what I'm basically doing is just seeing how far my loss could go, because usually I don't make more than 4 losses in a row. Previous to my trade history on my large account, the most losses I've ever executed on 3 separate instruments at the same time was 3 trades in the past 6 months. So I know that going forward into the future, there's a good chance I'm never going to execute more than 4 losses in a row. So 6% lost is obviously something I'll be able to deal with on the hourly. Now going down to these trades, it's obviously going to be a better area for me to trade within, which is the 15 minutes and 30-minute charts. But the biggest issue that I'll actually put here is, even though this is considered optimal conditions, I'm just going to mark here. If anyone knows about what I enjoy trading, it's not these time frames, because trading on smaller time frames, yes, point taken, you can make money, but in the long run, there's a very good chance you won't. Usually what you tend to find is making on The bigger time frames is where you make most of your money. That's where you can make anywhere between 600 to 700 pips per trade. And that's simple trades, that's easygoing trades that you can capitalize on. Whereas on 15 and 30-minute trades, firstly, I have to do intraday trading, which means I always have to be at my computer. Secondly, my risk parameters will have to be calculated incredibly fast if I'm using something like the MFI strategy, where I'm trading between, I have to do all of my analysis and my trading plan between the signal candle and the trigger candle. So when I said on the previous MFI video that I did, on an hourly chart, I might have 10 candles between the signal and the trigger, which can give me 10 hours worth of analyzing. Whereas if I'm trading on a 15-minute chart, 10 candles is only going to give me between an hour to 2 hours. Sometimes if I'm lucky, I might be given 3 hours for my trade. So my trade analysis is going to be condensed a massive amount. And also the biggest problem with trading 15 and 30-minute charts is that the market news might affect your trade massively. So if I trade throughout news, I'm going to have to be very careful. But once again, like I'm showing you, losing this maximum of 5% on a trade could damage the account. So what I've done here is I've basically shown you that there is a slight break in the system. And I just want you to take this all in and basically cross-analyze it, cross-question it as well yourself. But what I've effectively shown is with the account size of $250, I could already mark this as being a no-go project or probably an incredibly difficult project. So that's something that I've also identified, is it's not going to be the easiest graft, especially if you firstly using the correct risk management procedures, you are executing your trade plans authentically and properly, and thirdly, you're actually acting and trading like a professional would, which is also a very critical part to becoming a successful trader. So on this little account size, I've already identified that this is probably going to be one of the toughest projects I'll be able to go through.
So once again, like I showed you, I've identified the risk management procedures that I always use. I've used the right trading plans and entered into, point taken, this can be an unlucky trade. And I've gone through this time very often where I go through losses, I go through issues and trades don't go right and stuff, which I'm perfectly fine with. But the most important thing I was taught was you follow your risk management procedures without a doubt. You just don't throw caution to the wind when you're using money, no matter how small the account is as well. And that's something that for me I want to take from this project, is regardless of whatever's happening on the trading platforms, I'm still going to monitor my risk parameters as closely as I possibly can. And I know that what I showed to you, my trading plan as well as my my risk management profiles, those are the simplest profiles that I can show you, because the profiles that I used, I show them to my students privately, and I'm not going to show all of that up publicly as well. But what I've identified is this project has already shown a massive kink in the works, that the narrative that I've pulled from this first piece of information is, if you follow the correct risk management procedures, there is a very good chance you would not be able to make a consistent return trading a small account of $250. So that's firstly something that I've already debunked in this entire myth, that often a lot of traders out there, you get some trading institutes, they say X, you've got some of the professional traders, they're saying Y, and everyone's shouting at each other, and someone's sitting in the middle going, well, why don't I just test this? And that's what I'm doing. I'm actually testing it. So what I've basically shown is there's a very good chance that with the correct risk management procedures, there is a very little chance that you'd be able to trade on 4-hourly and daily charts. You'd have to be very careful trading on hourly charts, and you'd have to be pretty lucky trading on 30-minute and 15-minute charts, because trading on the smaller time frames I've never really found to be incredibly consistent. I probably trade on smaller time frames between 3 to 4 times in an entire month, and I tend to focus mainly on the hourly, the 4-hourly, and the daily charts because that actually shows entire market moves. As an example, when I trade oil, I'll trade oil with a $5 difference every single trade. I shorted it from 55 down to 47 once. I actually shorted it from 67 back in 2015, but all the way down to about $43, one of the biggest trades I ever made. But the thing is that is what we capitalize on as well-established traders, is we want to try and stick into the trade for a long period of time and capitalize on major market moves. When you're trading the ebb and flow, it's almost like you're stuck in the rat race, and for myself and for my traders, I do teach them how to do it, but I've never really recommended it as a consistent money-making procedure. Because firstly, that was not how I was taught to make money, and the stats have proven on my trading accounts that is not how money usually gets made very well. You want to try and capitalize on those hourly, 4-hourly, daily, and sometimes even weekly trades. And if you're following the correct risk management procedure, it's not going to work on such a small account. But nevertheless, this is not going to be me tapping out on this account. What I'm basically going to do is keep on trading, keep on analyzing, and keep on what I'm actually going to do is spend some time rebuilding my risk management procedure and rebuilding my trading plan and trying to actually see if I'll be able to capitalize and still turn this account around. Because once again, the account barely lost any money, so there's nothing for me to lose at the end of the day. And I think it could be a very big opportunity to actually show people out there that, point taken, you might not be able to do it with the correct procedures, but would I be able to build and alter certain procedures to show you exactly how it could be done? So once again, I just wanted to say, make sure to have a look at the previous 2 videos that I mentioned right in the beginning, because that's going to give you a lot of background information here. But I'd like to just say, please give it a thumbs up if you liked it. Give it a thumbs down if you think it sucks. Make sure to leave a comment as well. Let me know what you think and try and start a little conversation down there, because I really enjoy being able to chat with people about what their ideas are about this. Because for me, I'm as skeptical as you are. I really am not. Because for me, I'm probably as skeptical as you are. Even though I'm the trader sitting here making the money, I also want to still question everything I do and find ways to make it better. Not just for myself, but for my students as well. So I can show them how it really is done, and I can step into their shoes and try and see how it feels being a trader starting out. Once again, thank you so much for watching, and see you in the next video. Cheers for now. Okay, so I'm actually going to just quickly add on to this video. I know I closed it off. The last thing I was saying about what I was going to be doing is monitoring the US market, seeing how the close ends off and seeing what the Asian market starts to prepare. But basically what I've been doing is also because I'm managing my large trading account, so it's not just for the small trading account. I also have quite a big portfolio that I'm moving through the market, so this is also why I'm up. I'm not staying up because of a little loss on a small account. I'm also having a look at capitalizing on the market turmoil today with my large account as well on trading the indexes. So basically what happened today is the Dow fell the furthest in the past couple of months. So the Dow fell over 370 points, which has been a freakishly high fall in a quite long period of time. It's more specifically because of the political news coming out this week, especially because of Trump firing Comey and the sort of step he tried to make into an FBI investigation. Unfortunately, because of everything that's been happening with the Brexit, it's caused a lot of instability in those markets, as well as causing a lot of instability in the European markets. Like I mentioned, Macron's election also did cause quite a bullish market for the DAX, which obviously, when things go seriously bullish, it's obviously going to set it up for a pullback and a retracement. And that happened at the exact same time that the Dow got so affected. So gold once again hit a massive rally off of this turmoil. which tends to happen in opportunities like this. So basically now I'm sitting nearly going on to midnight. I'm going to watch the Asian Open now and see what happens in the market. I'm going to have a look at what's happening with oil futures. The rally in the oil futures obviously caused some sort of cause for concern in terms of what's happening coming up to OPEC's meeting on the 25th. People thought that production would be cut going up to the meeting on the 25th, and it didn't happen. So where a lot of people were trying to see if the market was going to reprice on oil back to sort of the low 47s, 45s, it never happened, and actually pushed a surge towards the $52 barrel. And I have a funny suspicion it might move up to retest 55. I really am not sure yet. I really want to see what happens in the OPEC meeting. OPEC did call for a massive bid to try and get a retracement on the pricing back in early May. So it's going to be interesting to see what they're asking for in this meeting. And obviously for them, they're looking for stability in the price, and the rest of the market is really not showing it. So oil creating that counterbalance in the market could happen. But now, obviously, on a smaller playing field, looking into what's happening on my trading account now, obviously opening up this double project and starting off with this $250 account has been an absolute nightmare in these types of markets. Last time I landed up in a situation like this, it was the Trump election. And that was a long time ago. That was over 5-6 months ago. So it's been incredibly volatile to try and manage these trades and trade my strategies, which I showed you, this MFI strategy. So basically what's happened is we're still managing a loss of about 40 pips. Once again, it's impossible that I'm not able to hedge my trade against this, because that would make life a lot easier for me. So I'm sort of going in the dark and working with the tools that I have. But what I'm basically going to be doing is opening up a little bit more of a loss on this trade, seeing if it moves sort of between the 50 to 70 pip loss region, and seeing if there's going to be a retracement, because mainly because of the news that has come out right now on the major news outlets. So like your Fox News, your Bloomberg, all of the big news parts that people follow. You're going to get a lot of the retail traders that are going to try and enter the market tomorrow morning expecting a big retracement, expecting that recovery in the Dow. Also because all of the stocks across the New York Stock Exchange took a massive hit. So obviously you're going to have a lot of fresh money coming into the market, and also specifically because of what I call this market flow news. So I have a funny suspicion. I don't know exactly what might happen, but I have a very good suspicion that coming into the US Open tomorrow, there may be a slight recovery or even a small bounce, which will be able to push my trade back into the profit, which will allow me to at least make a small profit, or maybe just close out flat or slightly forward in my position. Because right now, as I mentioned, having that risk management procedure almost become damaged by using such a small account. I really have to be careful trading with these accounts. So in terms of using my larger accounts, I'm also having a look in terms of the trade, the meeting coming up with OPEC. Obviously, in terms of Trump losing quite a lot of his support in the White House, especially because the Republicans have voiced their opinion of not supporting some of his decisions, and also starting to question his delivery on some of his promises. I think that the US dollar is probably going to see quite a big hit coming in soon, so I'm also having a look at what's happening in the markets there. And then the biggest one is to obviously see what's going to happen with the Brexit. I think the UK is going to be very newborn and on its feet, and you're probably going to see a lot of market volatility, which I'll be able to capitalize on. On top of that, basically trading the ebb and flow is what I'm going to focus on, and then effectively beyond this, I'm going to carry on documenting it. So just to try and give you a little bit of an insight to how extensively I look into the markets, I think that's a very important thing to show all of you, and also to show you what I'm going to be teaching my students, and to the level that I expect them to perform when they turn into traders. Because the biggest part about trading is to identify where the money's moving in the market and why it's happening. And you know, even if it takes spending early hours of the morning awake and missing sleep, I'm going to do it because that is what it takes to become a successful trader. You know, at the right in the beginning, when I started off with trading, just as a young trader, one of my mentors said to me, "It's probably going to be the most difficult thing you ever do, but it's also going to be the most rewarding thing." And for me, especially when I'm going through times like this, where I have to stay up late, I have to spend time there. I mean, I've spent the entire evening Skyping with some of my traders, trying to have a look at their portfolios and see what they're doing with their money. So it puts me under a lot of stress, because the thing is that not only is my money at risk, but my traders are also at risk when events like this happen. But the most important thing is that as a team, with my traders and with my students as well, we have a look at this as an opportunity. Every risk is an opportunity at the end of the day. And whether it's us hedging our trades to cover any losses, or sometimes even go back into profit, or even if it's trying to look at what we need to double up on our positions, and basically performing a serious risk management procedure to make sure that we can come out on top. And you know, it's been nice to be able to help you delve in and have a look into what we do, but it really goes to that level. It's sometimes scary when I speak with traders and I chat to them about their trading plans and their risk management procedures, and they look at me like I'm speaking Chinese because they don't do it. So that's also a big thing. Is I'd hope that people look at this as some sense of, I think maybe not inspiration, because I know if what I'm doing is probably not the best and someone's doing it better out there, but try to look at it as a piece of information that you might be able to learn something from. And to you as well, I'd love for you to at least give some input down below. Leave some comments, let me know what you think. I'll also make sure to leave my email there. If you want to spend some time emailing me and talking with me, even if you disagree with me, I'd love people that disagree, because I learn so much from them. Please make sure to leave a comment down below and let me know what you think of this video. And once again, I'll make sure to see you in the next video. Hopefully I'm a little bit cuddlier and nicer, because right now I'm very tired and I think I need more coffee. So I'm gonna go and sort that stuff out for myself so I stay alive tonight, and I hope to see you in the next video. Cheers for now, everyone.